Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 20, 2021. I want to talk about ATER. It's a technology company into consumer electronics. They got a beautiful product here as you can see here, and they're a leading consumer product platform. So with that, let's jump in and look at this company, understand it a little bit better. As you see here, we will talk about the company overview here and major ETFs holding ATER. Look at the competitive landscape and look at few charts and do a deep dive. And we'll also look at financial summary, stock performance, and after looking at technicals, fundamentals, let's do a final verdict. With that, let's jump in and get started. You might wonder, what is this ATER? Who are they? So these folks are building leading technology powered platform here, and they also acquire, they build, they acquire, they partner. They have a lot of these neat looking products here with the artificial intelligence and smartness. So with that, they got 14 brands in total, all into consumer electronics. Think about small electronics platforms, and they got 3,000 product SKUs, 79% compounded annual growth. That's an impressive number. And they sell through Amazon.com, Walmart, and Shopify, all major brands. As you can look through here, they build the product, using their AMI platform here, and they have home product and Remy and so on so forth. They sell all this, they build all this product and build intelligence and artificial intelligence into this product and also machine learning. And they also acquire the brands, and then they will basically automate it using their artificial intelligence and machine learning platform. And then finally they also partner with the other platform, other companies here. They will basically license or sell their platform as a service or a pass offering to these brands. So overall, they're into consumer electronics. They build, they acquire, they partner. Looks like a good game plan here. So with that, let's jump in and look at this company a little more. So ATER, they operate as a technology-enabled consumer product company in North America and internationally. And they got this cool-looking platform here, artificial intelligence Mohawk e-commerce engine. It's a software technology platform. It does machine learning, natural language processing, data analytics, and so on and so forth. It will be good to have all these small appliances smart, understand what you're talking about, and use artificial intelligence. That's what this company is trying to do. Look at your kitchenware, heating and cooling, health and beauty products. They want these products to be smart with their e-commerce engine and using artificial intelligence. So with that, let's jump in and look at this company into a little more detail. $5.1660 stock price and $299 million market cap. As you can see here, their stock chart is a little bit up and down. As you can see here, stock did very well. This was a short squeeze type rally here. Stock shot up very well. After that, I think we have a lot of the short sellers started breathing down its neck, and it kind of came down all the way, as you can see here. Try to go up again a little bit, and now this kind of came down. So at this time, all the short sellers have exited. They did a nice profit here. Now all these short sellers are gone. So now we can see, does it worth buying at these levels or holding at these levels? As you look through here from an analyst perspective, there's a buy rating. 3 analysts are saying buy, 1 hold, and 0 sell. So that's why it's a strong buy at this time. That's a very good rating. And this company also is a fastest growing company in North America. It's a 303 out of 500. That's a good honor to have. So Deloitte is recognizing this company as one of the fastest growing company in North America. And I think folks are really wondering about this company here. I think one report here, Investor Place, they're saying it's hard to recommend Aterian here with the cash crunch here. But off late, I think this company has made some move. They basically reduced their debt working with other companies. So that's a good sign here. So with that, let's jump in here, look into a little more detail. As you look through here, we got Yanu Sarig. He's the CEO of the company. He's a pretty young-looking guy here. And we got here Arturo Rodriguez. He's the Chief Financial Officer. Looks like both these folks have got the right thing to do here, and they're leading the company well. And then you got here from a Glassdoor rating perspective, 55% approve the CEO here. I think very very low rating here, just 4 ratings here, but I think this has to improve as you go forward. And Janu, the CEO here, he's got a lot of experience here. He co-founded Moha Group here, which is the really artificial intelligence behind all these consumer brands. And as you can see here, he also led multiple things here, financial services engineering department, and he also did some startup. He's got a lot of experience in this software development area. As you look through here, he was also working in various roles here in Bloomberg, Epic, and so on and so forth. And he's very fluent in all the computer technology here with the C++ and all these things. So overall, looks like a technologist to me, and he's trying to see if we can build intelligence to all these home appliances and kitchenware and so on and so forth. So with that, let's jump in here and go into a little more detail. So as you look through here, ATER, ATER, it's part of IWM, which is Russell 2000 small cap ETF. They got around $443,000 here invested, and it's also in Russell 2000 growth ETF, VTI, which is Vanguard Total, and IWC, and so on and so forth. So it's part of multiple ETFs here. Not a big deal here. So they're not a unknown company. All these mutual fund companies and ETF companies, they recognize ATER for their growth here. So with that, as you look through the landscape here, competitive landscape, look here, we got various companies. I have sorted this by 1 year performance. The top one here, VIZIO, I like this company. Also, right now it's not yet 1 year old. That's why you don't see a 1 year growth here. But otherwise, as you see here, we got nice performance in VUZI, 253%. And then we got SONO, and here, which is Turtle Beach, Sony, nice impressive growth here in Sony here, around 40% or so, and so on and so forth. And finally, we got our company here, ATER, stuck at the bottom here with the negative 21% 1 year performance. So we got to wonder now, hey, you know what, is it worth buying this company here? And before we jump in here, let's make few points here. As you look through here, we got a few companies with the lower RSI, VIZIO, VUZI, Sono, and here. I think all these stocks here with the low RSI, you could buy these companies here. Look, many of these have got nice sales growth here and also nice gross margin. And also companies like VUZI, which is VIZIO, and Vuzix, VUZI, VZIO, both have got high short ratio. That tells you these folks can really have a nice short squeeze type rally. And Turtle Beach also same story here. Nice 15% short ratio, low RSI. This can also go higher given there is a nice gross margin here. Quarter over quarter sales growth is negative, but they got a nice 1 year sales growth here. And then as you scan through next few companies like Sony, LPL, GoPro, so on and so forth, and even Apple for that matter, I think we should wait for a little pullback here. RSI tells you it's overbought at this time. Let's wait for a little pullback. On the other hand, you could buy iRobot, one of my favorite play. I think folks will start buying Roomba, the vacuum cleaner, automated vacuum cleaner, or the holidays. I think it will be a good one here. Nice high short ratio. I think we could buy this and sock it away. And finally, ATER, the company we'll talk about, with very very low RSI here, completely oversold. As you can see here, nice sales growth, nice gross margin. And right now, as you can see here, shorts have exited the position. Right now, there is no short float here. That's why I think we should look at this company and see if it is worth buying here. Now that all the short sellers breathing down its neck have exited, this could be a right time to look at this stock and see if we can invest and take it from there. So with that, let's look at few companies here. So we got Sono on the top here. Sono, as you can see here, stock came down a little bit, $31 stock. And as you scan through here, nice quarter over quarter sales growth, nice gross margin, handily beats rule of 40. As you scan through here, this has done around 86% in 1 year. Off late, it's been a little bit down, as you can see here. Look, we got nice on the balance volume here. Tells you we have a lot of people buying this stock here. And then you got Turtle Beach ticker symbol here. As you see here, stock is trying to decide where to go here. Right now a little bit weak, but look, on the balance volume is doing nicely here, going higher. That tells you there are more people buying this stock than selling. And here, as you see here, we got a nice gross margin, 36%. Quarter over quarter sales growth is negative, but 1 year growth is positive. As you look through, high short ratio, low RSI, it's done around 50% in 1 year. I think it's a good one to accumulate given on the balance volume is positive, nice gross margin. I think it's a good one to buy at these levels. Then you got iRobot here. iRobot, as you can see here, trying to decide where to go. Nice stable on the balance volume. That tells you a lot of people are buying this company here. iRobot has got a RSI of 50 here, middle of the road, and short ratio is very high. So you could buy iRobot also into this weakness and take it from there. And finally, we got ATER here, the company we'll talk about. Look, all these shorts have made a lot of money. Now they've exited the position. And look, folks are buying the stock here. Smart money is pouring into the stock. That's why a nice uptick in the on the balance volume here. And as you can scan through here, there is no short ratio, but it's got a 61% increase in 3 months. Very, very, very low RSI. Tells the stock is completely oversold here. So that's why I think it's intriguing. We should look at this company and see if it's worth initiating a position here. So with that, let's jump in here and do a deep dive. As you look through here, we got ATER. It's into technology, consumer electronics, and it's a strong buy right now. And market cap is around $298 million here. 52-week high of it's a 88% off from 52-week high. That's a huge big drop here, and they've done well from 52-week low, as you can see here, 84% up from 52-week low, and there is no short here. Nice volume. It's a really liquid company here, and as you see here, relative volume is a little bit low right now. But let's look at some more and go from there. Nice sales here, 226 million, trailing 12 months, good gross margin. Operating margin is negative, net margin is not there right now. As you can see it from a margin perspective, company is not there yet. I think they're not worried about profitability at this time. They want to build new products, build their artificial intelligence platform. That's where they're focusing on right now. And that's why you'll see earnings per share negative right now. So it's a growth company. They're not focused on earnings yet. And market is expecting earnings growth for next year, nice 60% here. So folks are expecting this company will do better next year. As you look through here, they got some debt on the balance sheet, not too bad. And free cash flow is negative. They should improve the situation here. Return on asset and return on equity both are negative. I love to see this in double digit here. So from a cash flow perspective, it's not there yet. They are still struggling a little bit. But debt perspective, I think they reduced the debt. That's why it's 34 million right now, which is manageable. I think they should even reduce it further. As you look through here from a return perspective or a performance perspective, not a pretty picture here. It's down 1 day, 5 day, 10 day, even 1 year. It's down, in most of these scenarios. 2 years, it's up a little bit. And as you scan through here, insiders are buying. Insiders are recognizing its bottom here. They are buying a huge amount of their own share here. That's a very good sign here. That shows you the conviction from insiders, and that could be a time for stock to start moving higher. And institutions are owning nice 21% here. Institutions are also buying the stock here a little bit. That's also a good sign here. Overall, they're trying to do the right thing here. They got some small bumpiness with the supply chain issues here, and company also had a struggle with the short sellers breathing down its neck here. Now they have gone. It could be time for this company to start making a move again. So with that, from a numbers perspective, from a earnings per share perspective, this company is not doing great. As you can see here, negative, more negative, and so on and so forth. I think this company is not focused on the earnings yet. They want to grow their portfolio and the products and technology. And from a sales perspective, this is a pretty picture here. I love this. Nice clip here. They're growing their top line sales year over year nicely. And as you look through here from a outstanding shares perspective, it's pretty stable here, a little bit down. That's a good sign here. And if you look through the quarterly numbers, as you see here, they've done well even through supply chain challenges here. They've done $68 million in last quarter. I think that's a nice picture. They're kind of stabilizing their top line here and growing nicely on the revenue purpose. And as you look through R&D, this company is spends money on R&D because they got this artificial intelligence, machine learning. You got to keep up. That's why this company spends money on R&D. It's always good to spend money on R&D, and this will set them up for the future nicely. As you look through here from an income perspective, they're not there yet. You saw earnings is negative and income is also negative. These folks want to invest on their own platform versus showing some net income and pay some tax to federal authorities. That's why company is not a earning type company. It's not focused on profitability yet. Instead, they want to build their own product, spend money on R&D, and be that brand everybody knows. So with that, let's jump in here and look into a little more detail. As you look through here, the company was started back in 630 or so, and as you see here, market cap was 138. They grew nicely, but now with this latest debacle of short sellers, company came down drastically. Right now, the market cap is 298. So that's why it's an up and down type stock. This stock is not for your retirement account, but instead, if you want to play around a little bit, take advantage of this beaten down stock, you could do that. From a price perspective, it was a $7 stock a while ago, back in 2019, became $10, even became $29, as you can see here. But now it's back to $5 after this short sellers really, choked them pretty much. And as you look through here, from a sales perspective, they're doing okay. They're doing nicely at $68 million here. Look here, they've done pretty okay. They had some bumpiness a while ago, but they're stabilizing their top line growth. That's a good sign. They have a nice, 16% or so sales growth. That's also good. As you look through here, earnings per share is negative. Company is not focused on the earnings yet. And from a cash perspective, I think they had a lot of cash back in 630. Now it's reduced, but they're making some arrangements to reduce the debt also. Look, their debt reduced from 83 million to 34 million. That's a pretty picture. And debt to equity ratio is manageable here, 0.2. That's very good. And as you scan through here, they're not there yet from a free cash flow perspective. It's negative, but look, they're improving from negative 24 million to negative 8 million. That's a good improvement. And from a gross margin perspective, there's a nice improvement around 2% on the gross margin side. That's good. Operating margin also, there is a nice improvement here. And net margin is negative. They are not focused on the profitability yet. And as you scan through here, they're spending money on R&D. That's always good. I like the companies to spend money on the R&D instead of really stopping R&D and choking the company. It's a good sign here. They can take advantage of the downturn, spend money on R&D, and differentiate their products here. ROE and ROI, return on asset and return on equity, both are negative. I want them to improve this situation here. It's not a pretty picture here. So with that, let's jump in here and look at the price to sales. From a valuation perspective, it used to be a little expensive. Now it's not expensive. It's very much manageable. Valuation is also okay here. So with that, let's jump in here and look at the quarterly result transcript and see what we can make out. So from a quarterly result perspective, they beat earnings per share by 6 cents here, still negative as you can see here, and the revenue they beat by 15.89%. That's very good. If they can string couple of quarters like this, stock can go higher. And as you look through here, they have some global supply chain challenges. They got some issue with the soaring cost. As usual, you'll hear this in many companies' earnings report, and they are working through their supply chain challenges. They're also working on brand launches, mergers and acquisitions, and so on and so forth. And their revenue increased by 16%. That's a very good number here. And they're working with Amazon.com to step up their ecosystem of third party sellers in general. I think they're getting the help from Amazon.com here. And they also secured the reduced rates with Flexboard and XPO and other partners here, so they can ship for a lower rate here. That's a good sign. And they also have an agreement with the lender to reduce the debt from 92 million to 25 million. That's a very good sign here. You want the company to reduce the debt, this company is doing it. And they got the net revenue perspective. As you can see here, it's 58 million, 46 million from organic, and 1.4 million from mergers. I think overall they're doing okay there. As you scan through here, they suffer some issues with the inventory shorts here. That's a major theme as we go forward. And they're also having a nice gross margin increase here, 50.2 here from 47.8. And from a balance sheet perspective, they got some nice cash, 37.5, but it came down, which is not a pretty sign here. I think they have to improve their cash situation as we go forward. So with that overall, I think company is struggling, but I think they are working through the issues and trying to grow their top line and focusing on R&D. So with that, let's jump in here from a earnings history perspective. As you see here, why the stock came down drastically. Look, they missed earning 3 times continuously or sequentially. That's why stock came down pretty much big time, and coupled with the short sellers breathing down its neck. Now we have a good quarterly report under the belt. If they can sequence couple more like this year, stock can go higher. As you see here, this one is not very predictable by Wall Street. These guys can miss sometimes, hit sometimes, so it's really not very predictable. But if they can string together a couple quarters here, stock can do very nicely. And from an insider transaction perspective, you got this MacArthur here, LLC, 10% owner. Look, they bought a lot of 11 million worth shares here. That's a very good sign here. So as companies, partners like this buy, I think that's a good sign here. Now that short sellers are all gone, this can help the company to really go forward and increase the price here. Right now they're at a bottom here. Stock is price is around $5.60 here. They're 89% down from 52-week high. I think at this point it's compelling to buy some ATER, given insiders are also buying it with a huge value here. So with that, let's jump in here, look at the performance. As you scan through here, 2020 was a banner year for the company, did very nicely. 2021 stock price went as high as $48. Look here, and it was as low as $3. Look at the swing. This is why this stock is not for your retirement account. Instead, if you are an active trader, if you want to take advantage, you can buy the stock here at the very low price like right now, and hold it for a while and do some trading. Clearly not for a retirement account because it's very volatile. As you look through here from a monthly performance perspective, this stock has got more reds than greens here. Right now, I think with it's down so much, you could buy some. Normally, it comes up nicely. Could be short squeezing rally. Look, it reached $39 here. Nice, impressive dollar amount. So this can really, it does have short squeeze type rallies in between. Right now, stock price is very low. I think it's good to slowly acquire and keep it. And from a weekly performance perspective, look, last week, big time down here. So could be good to initiate a small position and go from there. And from a daily performance perspective, I think a huge big drop here, probably after the earnings here. And now it's dropping a little bit. Could be slowly good to buy here around $5 here and accumulate. And from a technical perspective, look at the chart here. Look, stock has gone up nicely, sometimes in November last year, and went nicely up here all the way to $48. This is the short squeeze rally, and it came all the way down. All these shorts, were breathing down its neck here, came all the way down here, tried to make some move, and came all the way down. Right now, it could be compelling. It's somewhere at the support level here. Could be good to slowly buy and acquire here and take it from there. And as you look through here, this is a 1 day chart. Stock is trying to stabilize, as you can see here, after the earnings. And right now, we got a red line on top here, blue line on the bottom here. This situation can change. The distance between the red line and the blue line is very, very small. This can change. And look here, we got check in money flow. Money is flowing into the stock. I mean, this is on the balance volume. On the balance volume is pretty positive here. Smart money is flowing into the stock here. At the same time, check-in money flow is trying to decide where to go here. Right now, there is a small uptick indicating smart money is slowly going into the stock. That's a good sign here. So on the balance volume, it indicates there are more buyers than sellers. That's why it's pretty stable here. So with that, given IV percentile is very, very, very high, 58, don't buy call options here. It's a low price stock. Instead, buy the stock outright so that way you don't get hurt. Call option is not a good sign when the IV percentile is high. So with that, let's jump in here, look at the option chain. Stock is trading around $5.60. Look here, we got around $5.5 strike price here, and we got 177 open interest. Keep watching down here. We got a lot of open interest at $7, $10, even $20, $22. In general, there is a lot more call buying here at a higher price level, and there is some put buying also, as you can see here, but put volume is not too high compared to call volume. So with that, generally it's a bullish type sentiment in the options market. Options folks are betting this stock will go higher, and look, some folks are even betting it will go to $22 or so by February next year. So with that, let's jump in here and look at the option statistics. So we got 5,514 call options traded and 2,900 put options traded. More call options traded than put. That makes a put call ratio 0.54. As long as it's below 1, it's a good sign here. This tells you there are almost 50% more call options traded. That's why folks are betting the stock will go higher. As you look through here, stock price is 5.60, VWAP is 5.60 here. So it's telling you right now, stock is it's showing there is little increase in the price, not too much. So VWAP is indicating stock might stabilize here and then it might go higher. So with that, let's jump in here and look at what should we do now. We looked at the technicals, we looked at the fundamentals. What should we do with the ATER right now? There may be some folks who are holding the bag here thinking that this will squeeze, but what should we do now? So as you see here, the net revenue increased by 16%. That's a good sign here. They have some challenges in the supply chain. They're working through the challenges, and despite of supply chain challenges, they are doing their expansion, and they have reduced rates on their shipping. That's a good sign here. And they have some inventory issues, as you can see here. They're working through the issues here. And overall gross margin increased. Good sign. They're one of the fastest growing company in North America by Deloitte. That's a good sign here. Good honor. And gross margin is, the gross margin is good, 49%. And quarter over quarter sales growth is also good here. And short sellers have been breathing down its neck all along. Right now, short sellers have exited their position. That could help the stock to accelerate forward from these low levels here. So with that, I feel that stock is overly punished here. Recommend accumulating slowly and buy a nice chunk here. But don't buy for your retirement accounts. This is for active traders. You could buy some and hold it and wait for the stock to go higher. So with that, thank you very much. Happy investing and trading. Please subscribe.